Okay, Sherman here. Today is the 6th of May, right? And I thought today we're going to do something a little bit different. We're going to talk a little bit about what I think about trading, and I'm going to show how a way that I do trade when it comes to swing trading. Because, if you like to know my thoughts about this, I usually focus on two things. One is swing trading, the other is reaction trading. And they're all a little bit different in terms of the stop loss, the take profit. Swing trading and reaction trading are not similar at all, right? The way the trades are entered are also different. But I think I want to talk more about swing trading because swing trading often requires some kind of coordinated effort, right? If you can call it that. So, looking at the calendar, it's actually a good way to decide which pairs we want to trade. Because if you're looking to have a swing of 40, 60, 80, 100 pips, then you can potentially go 200, 300 pips, right? Now, I'm not talking about supply and demand, stuff like that. Where you try to pick a top and bottom, and you enter trades only like once every few weeks. That's not the kind of trades that I'm referring to. That's like basic stuff. There's nothing special. Anyone can look at the chart from here. Just go to daily, and then it says, "All right, I think that's a support and demand, and I just want to take a trade off here. Say maybe here, I want to take a buy here, or maybe somewhere at the top here, I want to take a sell up here, right?" So I'm not talking about stuff like that. When it comes to swing trading, I'm talking about stuff that is something like that. Something in the middle, and I want to get it from here to somewhere there. And it's not even at the bottom, right? If price action truly comes up to somewhere here, and you want to sell there to come down for a certain number of pips, well, this is pound dollar, and the pips are worth something, and you want to put stop loss just above that. That's okay, but this is not what I'm doing. I don't think that's quite so difficult. Right? If you just pick the bottom, let's say you just say, no, I just pick the bottom, and then you just kind of wait it out. Well, ultimately managed to survive, right? Provided the count was large enough. This is a daily time frame, but that's what people do. They try to buy the lows, and then maybe at the highs, say around here. I bet you there's going to be some sell orders there as well. Again, this is not what I mean by swing trading. At least this is not what I mean by going for 40 pips. Although you can probably go for maybe 80 pips or so, I guess, if you go from there to there. Or more. Oh no, actually it's 800 pips. That's a lot. Yeah, so your price action gets there. It might be a good idea. Look at all these peaks here. Right? So swing trading is usually something like that. Then you're usually looking for something like that. And then you're looking for the down. This is what swing trading usually is. There's always some kind of weird correction in the center that's going to put everybody on the wrong side, right? Something in the center that before the next strong wave starts, right? So the different strategies for when the market moves in different ways. So the kind of swing, the kind of trade that I'm talking about when it comes to making like 50, 80, 60, 100 pips, right? Isn't this highs and the lows, right? It's more like this stuff in between, right? We come from, makes a move correction and next move down. There's not going to be any of that nice support and resistance from you for us to actually take trades from, It's more like there's going to be something nasty, and how do you get in on the next trade, right? So looking at the calendar is actually a good way, because when you look at stuff like that from Singapore, so all this is in Singapore time. You look at the CAT news, look at Aussie news. So today is Monday over here. So tomorrow there's going to be news in the morning for Aussie dollar, Kiwi, Aussie cash rate, RBA statement. Okay. So interest rates are very important. They move markets, right? So which means that I'm interested in Aussie because tomorrow morning, stuff is the Aussie and Kiwi are going to be affected. So what I have to focus on right now is I'll forget about the euro, I'll forget about everything. I'll just look at the Aussie pairs because I need the news in order to make money. If you are doing swing trading, I need the news. People, if I'm reaction trading, then I don't want the news because the news is going to just stop me out. But if I'm looking at wave analysis, I think that it's going to go like this, or I think that this is going to go like this, right? Or I think it's correction. I think it's going to like I think a correction. I think a breakout, small, and it's going to like go this way. You need news to propel this in that direction, right? So if you're a swing trader, that's what we need. There's one very good trade here, pound dollar. It happened somewhere around Christmas. Sorry, so we are on pound. This was the one over here. This move right here. I can still remember. In fact, this was featured on my chart. This one over here. This one was actually perfect. So if you saw this one, you came down here. This was actually the entry would not. If you have a very brave entry, could have been there. But if you're doing a breakout, would have been here. You have taken that, right? And the lot size was big enough. This would have been. Let me see. Yeah, 1.25 to around 1. Actually, would have been here for me. Not, I can't take the very bottom. Probably around here, 1.24. I wish I could say I took it up there, but I didn't. So first it broke before it came down. So if this is the kind of move that we're interested in, then often we need some kind of news. News can help make that happen, right? Can help make that happen. So let's go look at Aussie. Okay, so let's go look at the Aus. See, important stuff. All right. Let's see what he can potentially do. It's all potentially down, unfortunately. It looks down. This move was kind of strong. And now, right now we have this downward move here. So the question is this all the correction or is this going up now? Hard to say, right? Because look, there's still so much play that can possibly happen. Let me just go look at the higher time frame. In this case, we just have to trade it as this. When I look at this, I'm thinking the upside looks nice. The main reason is because this move is pretty strong. And it's possible, this is always nasty when they do something like this, do something like that. Then they make one more move down this way. But I can't say for certain this is going to go up. News could always potentially push this up. So tomorrow's news, this could be potentially coming down in order for it to go up. But so news could potentially do this, and if we're lucky, we get something sideways, and then this will then be the one that's safe to take up. So let's say I wanted to be extremely safe, I will not enter any trades right now because, my God, anything can happen. What if this just decides to go down even lower? Right? Let's say I flip from here to here. I think this is the first wave, right? What if it decides to come here, 70, 60? It could do any of that. There is no confirmation to actually just buy anywhere of these lows, right? Even if I was to let's say I was to look left, the only extreme level may be over here, somewhere here. So if you want to take a buy limit, I would say 0.68335. That will be the place. It's an extreme level. You buy, even though it go down, I guarantee you it's going to come back up. It's going to come back up again. Maybe you just make something like a double bottom this way. Also possible. Right, let me see. That's a potential double bottom. In my books, not really. So not a double bottom. Could be just a retest of structure. It could just come down a little bit, like this, and then it goes up. That's also possible, right? So times like this, since it's too far away from the bottom, Aussie news is coming out tomorrow, right? Do I care whether it's good news or bad news? I don't care, to be honest. All I'm looking for is looking at this structure. This current piece is coming down, and any move down is really good for the buys, to be honest. Now, I would not be surprised if price action was to come down here, and this, or even spike even lower here before it goes up. Because remember, if this is really gonna go up to levels like this, like this is all stacked orders, you see. So if it goes, it will penetrate easily from here to here. Easily, you get from 0.69 to 0.78. I think in the course of like a month or two, it's not so hard. You think it's not true? It's true. You can do that. See, from here January to around April, right? January, February, March, April. 4 months. 4 months. So if you took the buy, turn off the computer from the bottom, come back in 4 months. I guarantee your account will be up. You just pick it at the bottom. But let's say we can't pick it at the bottom. Let's say that doesn't happen. And then let's say we know now is not the right time to enter, right? Because news is out tomorrow. If it's going to move 100 pips, it ain't gonna be right now. Today is Monday, possibly tomorrow morning, maybe 8:30 is a good time to have a look. But let me just look at this current last wave. Let me just see what's going on here. 1, 2, 3. Yeah, see, this last piece is strong, and there's no guarantee that this piece is also 1, 2, 3, 4. What you see here? What this could do is it could go up here, it can come down again. There are many ways this could come down. 1, 2, 3, a correction. This is 1, 3. It just comes up here, and it will do something like a 1, 2, 3. Move one wave up, it comes down again. You ask me why? How do I know? I mean, it's just how price action moves, and the time required, from here compared to this. See the time required. It can do that. It can do that. So what would make the buy safe would be, this is strong. This one, as it comes down, it needs to go down sideways. There's 2 ways it can come down. Because price action either moves like this, or 1, 2, 3 down like this, right? 3 waves or 5 waves or whatever. Or the other one is 1, 2, 3. You see, they're both 3 waves. This is 3 waves, this is 3 waves, but the time required for this one is much shorter, you see. So in this case, if this one had something like this, a 1, a 2, a 3 like this, hell, then that's easy buy. That's an easy. It makes it easy, right? But what if the 1, 2, 3 isn't like that? What if it's 1, 2, and then 3 sharp, strong like this? So it is saying something else. It means that it's motive to the downside. So in a short amount of time, the price actually pushed far, right? It's just like if there's something that you like, let's say there's I don't know, a Huawei or iPhone, iPhone 11, and everybody wants it. Well, it'll be snapped out in a very short amount of time, right? So in this case, in a very short amount of time, if the price actually moves very far, it means that, well, it's turns out that it's not going up. It looks like it's going down. So timing is very important when it comes to being a successful swing trader, right? I've seen many over this weekend I was studying some strategies and on moving averages, and I think the problem for moving averages is it does not give you the idea of wave analysis. So when people use moving averages, sometimes moving averages are they are all going in one direction together. Like say, so sometimes I just the moving averages look like they're all moving together. But then what's more important is for us to only use moving averages, I feel, when you're trying to decide how to enter a trade, right? So let's say if you have to use a moving average, what's the normal moving average that people use, right? Something like this. Now, different traders have different settings. But the main idea is that if everything is below, if it's all below like this, right? So, misunderstand, if this one goes up and it does this is actually a good sell down. So if tomorrow news comes out and pushes this up, well, you have to understand this doesn't mean that. This can be this way. It comes on like that, it goes up like this, it goes up here. Suddenly you buy here, thinking it's going to go, but then at this very place, it just flips down, makes a correction, and then it drops. to here. Everyone gets killed, so somebody bought low in order to sell high. And if you bought here, basically we stopped out right here, forced to sell at a low, so that someone else can buy at a low. This is a buy, B-U-Y. We are forced to sell here. And then, whoever bought low would then want this to go up so that they can sell high and make a profit. So, when it comes to moving averages, I think having an idea of wave analysis and then using the moving average to time an entry would be the correct way. Moving average by itself, it really doesn't mean anything. I mean, when I look at this chart, like this, it can be quite confusing actually, to be very honest. Right? Even if you look at this, it's coming down. It looks easy, but then when that happened, it's like, what's going on? This moving average says that it's supposed to go up, but it didn't. It still collapsed. Right? So my take on moving average is it's useful to a certain point when it comes to entries, like C entries, but there must be something telling you that you can take the buy up, which is usually has to do with wave analysis. This is going up. So when this one starts to go up like here, so anywhere here, you think there's a 1, think there's 2, there's a 3, and then that's where the moving average will help you. If you don't know where we are in the wave and you just look at something like that, this actually looks down. You see, it actually looks down. So assuming someone who just uses moving average and doesn't not really know about wave counts or he doesn't know about wave counts or understanding of wave counts like Elliott wave 1, 3, or 5, which really doesn't work that well, then this actually looks downside correction. This looks downside. And the good thing is that once this one pops up, then of course you should know that this is up, it's crossed over. Maybe I should be stopped out. Right. So and then try to use moving average to go the other way. But that said, it's also not so easy to be stopped out. Some people don't like to be stopped out. And when we actually use limit orders, sometimes we believe that levels should hold, but they don't hold. They actually they do bounce a little bit. You see, they bounce a little bit, but they don't actually come back to where an entry would have been. So maybe it will be somewhere here, right? Because it's all under the moving average. It's all below. People might have sold thinking it's going to go down, but it didn't. So moving averages is more for entries, I would say, but not so much in determining the bigger direction, right? So likewise, in this case, when looking at this Aussie dollar and I was looking at the news, so I was thinking, okay, so maybe let this do whatever it wants to do. But hey, if it comes up here and I see something, I think this is a good sell. Let it come closer to the bottom, and then you have to trail, because who knows, maybe it just trails down and then it just breaks this low. But what if somehow you see something up like this and see this one up, and you're lucky you get it here? Well, then that's a good buy to go up. You see. So should you place a trade here right now? The answer, the safe answer would be no. Safe answer would be no. Any trades here are all on a very low 1 minute, 5 minute time frame. It's all scalping already. Okay? You're gonna scalp this up. Can this potentially big gap here? Can this potentially crawl up here, close the gap? For sure. But then if so, this has nothing to do with wave theory, right? Because if this one just goes up like this, suddenly just decides to drop to this level and then it goes up again, that's all possible. Price action can do at this point when it's like this, and it's just crawling and creeping everywhere. If it wants to drop, it can drop all the way to this level, right? So it's just risky. This one is almost like risky. If you the only safe bar I can see right now is somewhere at this bottom here. If it drops here, your stop is below. Then you hope for it to bounce to go cover the gap, right? So that's one kind of trading you can actually look at. Okay. So anyway, next one, let's go look at Kiwi dollar. That's going to be important also. Hold on, where's Kiwi dollar? And see the outcome. I don't see. It should be here. Yeah, here it is. Okay. Kiwi dollar. Yeah, everything gapped. And this definitely looks like, so between the Aussie and Kiwi, at least this one looks like it could potentially go up. 1, 2, 1, 2, yeah. So right now, if what you want to see is for this to crawl further down, you know, make sure that the time required for this takes a long time. And I would say for the Q dollar, it looks like a safe buy. Looks like a safe buy. We just want this to go up and come back sideways, and then we can go. You can take it up to here. You can take it up to there. Okay. So let's go. This is on the 1 minute time frame. So this is a scalping time frame. So let me just remove all the moving averages. Now, Kiwi dollar has an upside look. I think at the point in time I was over here, I was thinking it was going to come down. I thought it was going to come down to break this low, so it did, and then of course it bounced, and then now it's creeping back down. So we had to choose one for a buy. This would be this would be a good one to actually buy. Let me go look at 4 hour. Of course, the main concern always is could it drop even lower? Let me see. Could this drop to around 76? Possible also. Unfortunately, there are often these patterns can complete, whether you like them or not. It is true that these patterns do complete, especially it's almost like Captain Obvious, you know. So for a buy limit order, I would say anything around here, it's a good buy limit order. 270, yeah, even this one also be a good. Anywhere here. So an extreme level will be right here. You want to put a buy limit order, that would be it. Stop would have to be below. You know, can this potentially go up? Well, a bounce doesn't guarantee anything, as I've mentioned. You know, yes, maybe it bounces from here, it does all this crazy stuff, pulls back. Instead, on hindsight, when it gets there, it says, well, I got the bottom. That's true. But I've also seen them just come up here, like, you know, they just crawl up. And then I've also seen them from here just drop all the way down. And the entry, what was in profit, actually got stopped out. I've seen that as well. Therefore, when you take a reaction trade, always take some profit, because a bounce trade doesn't mean shit. It doesn't mean anything at all. All right. I have to use that word, but it's true. Bounce trades just, that's it. Is this going to be that? Nobody knows. Usually, if a move happens to go like that, they always need something, some kind of correction, some kind of stuff in order to confirm the continued move in one direction. Without these continued moves, they do not move. Basically like this. So whatever you take a bounce, well, you're praying for something like that. You're praying for that, right? Because what happens if you don't get that? Well, then it can always just drop down. That's it. A bounce is just a bounce. That doesn't mean anything at all, right? So easy come, easy go. So for limits, it has to be at the bottom. For breakouts, if you think that this is going to continue the upside, then the buy has to be up there. Or you just simply wait for this to break, let it correct, then you buy. You see like this, it breaks out, corrects, then you buy. But don't forget, once it moves, it's going to pull back again. And that's why I also say this, that if you buy this, it's going to come back against you somehow, because you're seeing it right there. You see, even if you buy, see here, it came back more than half, right? Let's just see, you buy it, you see it came back actually almost the entire 100%. Right. Okay, this one was actually pretty good. It went pretty far. It didn't come back against you. More like a 1, 2, 3, 4, 5. So this was definitely a first wave correction and next move down. This move was a certainty. This part here was ambiguous, because why? It could have come here. It could have done that. But again, I think when people were all looking for that move, well, they were all on the wrong side, because the timing was not spot on. Although this move is possible, but man, look at the bigger picture. There are orders here to be filled. So people need to be taken now. Always remember, people need to be taken now before somebody can make money. And those people who got in early, I guarantee when this one goes and they are in paying out the swap and all that, but when price action comes back here, they are still not making any money. Because why? They had to survive the negative swap. So they have to actually go up higher before the count becomes break even, and a little bit higher before it becomes positive. All right. So timing, man, Without good timing, gonna be in 40, 50K drawdowns easily. Snap my finger, 1-2 weeks. $, $19,000 drawdown. If your lot size is more than 30, 40, right? Easily. Okay, so again, Q dollar, you can look for this. If it pulls back, this is a good buy. Risk reward, it works, okay? If this one drops even lower, then when this one goes up, you just take a profit. Because why? Yes, it might go, but it's a reaction trade. Limit orders, always take profit. Always take profit because limit trades are reaction type of trades. This will not come true if you don't get any proper movements like a credit structure. So just taking a buy here, it can simply just collapse back down like this. Then maybe make a double bottom here, then it goes up. All right, a lot of things can happen. So limit orders, always be very careful. All right. So let's go back to the calendar. So I already spoke about the Aussie, the Kiwi. So this is very important. This is important week for the Aussie and Kiwi. I see a lot of opportunity. 100 pip, 200 pip moves. All right. Then after Thursday is CAD, dollar. Then Friday will be pound. So the immediate thing you need to worry about now is Aussie and Kiwi. So look at the Kiwi. Kiwi looks very safe to trade. It looks safe. Buy stops or buy limits, because the reason for this is because the potential is there. The potential is there. At least here the reaction is there. But more important is you know where the stops need to be. You buy a limit here, you know the stop is here. If it breaks out, you know your stop is there. You know where the stops are. So a trade, when we cannot measure the lot size or how much to risk, that's when things will go wrong. Okay. Anything else? I think I'll stop here. So plan your trades. Take care and exercise more. Bye-bye.